Moving on to our next segment, scaled up are the new hype. And Europe, of course, wants to make the most of this hype. From Paris to Berlin, what do European scale-ups need to make the most of it globally? Back to our discussion format with Florent Debienne, Managing Director, Head of Technology Fund Investment of Bpifrance, here with me in studio. Hi to you, Florent.
Hi, how are you?
And live from Berlin and from Munich, we'll be joined by Paul Wolter, the Head of Politics and Communication at the Deutsche Startup Association. Hi to you, Paul.
Hi, everyone. Hi.
And of course, Itziar, Estevez, Latasa, you're definitely partner at Iris Capital. You're live from Munich. Back to you, Itziar.
Hello, good afternoon.
So, quick round first of panel to learn more about your part in the scale-ups ecosystem. How are you helping them grow and expand globally? We'll start with you, Florent, here in Paris, if you may. How does BPI boost scale-ups?
Well, I think this investment part of it, there's three levels where we can help boosting startups, especially French startups, but also European startups. First one is through our direct investment activity. So since 2013, we manage within Bpifrance a fund that we call Large Venture, whose goal is to invest in tickets above 20 million euros. It seems quite common these days, but 7 or 8 years ago, there was not that many funds able to sign this kind of checks. So this fund is 1 billion euros, and we invest between 100 and 200 million euros per year in companies such as Mano Mano, Doctolib, Payfit, United, DBV, so in IT, in life science, in eco-technology as well. So that's the direct part. We also, and that's the part I'm responsible of, is to invest in VC funds. So for a couple of years now, we've been encouraging GPs to increase the size of the funds. That's really a part of a strategy. When a VC fund was 100 million euros 5 years ago, we told the GP, well, next fund we would like you to be 200, for example, because we were quite conscious of the fact that they needed this money to help companies on a longer term, in good days and in bad days. And with 200 million funds compared to 100 million, you can pay good profiles, you can attract good international profiles in your GP, in your management team, which is necessary to help in a good way this type of companies. We've also been quite proactive in encouraging GPs to create specific growth funds. Could it be in an existing platform, just like imagine Partech, they had a VC activity and they created a growth activity. Sofinova in life science, pretty much the same. So existing platform who wanted to develop themselves, that's something we really like within Bpifrance, but also new actors that identified growth as an emerging market in France because the startup has this level of maturity. So we're pretty active in creating and helping the founders of Gaia, Jaito, this type of actors. So that's activity within funds, direct activity, and we also have a role in trying to attract LPs in this type of funds. So, for example, Nicolas Dufault, the head of Bpifrance, and Benjamin Patano, the head of Funds of Fund Activity. Before COVID, they used to go every year in the United States or in the Middle East to try to attract these LPs, endowments, foundations, funds of funds to make the publicity of French and European funds compared to US funds. If US funds invest in the top French startups, French funds could do it as well. So that was part of the activity. And on the more operation side, we invited these LPs once a year with a dinner with Emmanuel Macron. So that's the fact that these LPs were coming. But we also take this opportunity to have one-to-one meeting with the top GPs of our portfolio, and these LPs try to make them invest in their funds, and that's worked pretty much because we had more than 300 or 400 million euros of these LPs investing in French funds over the last 3 years.
Very diverse portfolio indeed, and financial tools here at BPI. Let me please turn around this panel real quick with you, Paul. My understanding, though, is that the Deutsche Startup Association gets together entrepreneurs and business angels to make cheap global deals and ambitious fundings. Am I right?
Yes, you're right. First of all, the German Startup Association. We are an association, and the German startups and German VCs are our members. So we are an association of members, and our main goal is more or less that we try to provide the German startups with a good framework, with a good legal framework and a good economic framework for them to prosper and to grow. And for example, two very important issues is, of course, talent. For example, at the moment, we are trying to provide German startups with a better framework for employee stock option programs, because in Germany, compared to other countries in the world, our employee stock option programs are very unattractive for employees and the startups. And the second thing, of course, is capital. And in Germany and Europe, of course, it's growth capital, what's missing. And therefore, we try to motivate and mobilize the German private sector to invest into venture capital and into our startup ecosystem. That means we try to, together with the German Ministry of Finance and the German Ministry of Economic Affairs, to establish a fund of funds structure for pension funds and for insurances to invest in this fund of fund, and then invest into German and European VC funds, because what we see is that especially in the growth sector, more or less the American and the Asian funds investing in our large scale-ups, because our European and German funds they are not big enough to write those financing rounds. That's why we need to mobilize and motivate our pension funds and insurances to go into venture capital. So that is what we do. We are a lobbying organization and try to do our best for German startups.
Thank you very much, Paul. Itziar, let me have your perspective on this. I mean, we've seen over the past few weeks and months success stories all over Europe, European jewels when it comes to scale-ups, such as the e-commerce marketplace Miracle with $300 million, or the industrial robots Exotech. We were lucky enough to have Romain on stage a few minutes ago, where there is a $90 million raise. So what does this mean? Deals are not dead, even at COVID times?
Certainly not. So one could argue that the funding figures, have gone down in the first half of this year, in 2020, in particular in Germany, for sure. However, if you look for where it was coming from, 2019 was a record year, and now we are back at 2018 funding levels. So in the context of a global pandemic, I think that's actually quite a healthy level. Also, some of the figures going down are linked more to the late stage phases. In Germany in particular, we are heavily reliant on international capital for late stage rounds. And there it has been the case that some international investors have been a bit more reticent and careful when investing without seeing the teams, for example. But all in all, we are seeing large rounds and a picking up of the activity again, in particular in Germany.
Let's stay on the German question when it comes to a deal, which are definitely not dead here, even during COVID. With you, Paul, because a recent Ernst & Young study indicates that fundings have lowered massively in the country over the past semester. So is it an indicator for midterms or just a short-term COVID-related effect? What's your take on this?
I think I would second what Itziar said. I don't think that it's like a midterm or long-term thing, what we see at the moment. Itziar said right that especially the large rounds are led by American and Asian funds. And of course, if you don't see the founders, if you don't really over here in Germany, it's more likely that you once more like financing a startup in your own region, for example, in the US. But I think as soon as the crisis ends, the VC activity, I think it's increasing again, and we see if you have a startup with a good product market fit, and if you have a compelling business model, you'll still see finance rounds in Germany and VC activity. So I don't think that this is a long-term tendency.
Thank you so much, Paul. Let's move on with you, Florent, when it comes to France and the way people, and I mean, actually the way VCs and the way institutions have been investing massively during this sanitary crisis. What have you seen happening since lockdowns and since the ease of lockdowns too?
Well, what we've done the first day after lockdown was announced is trying to call all the GPs we had in our portfolio to see with them how their feeling was, which was quite a big job because we have 160 different GPs in our portfolio. And what's quite interesting, if you compare, for example, with the financial crisis 10 years ago, is that there was much less panic than 10 years ago, probably because the ecosystem is much more mature. The funds are bigger, which means there are much more room for follow-ons, so much more experience, and the GPs really took these first days and first weeks to work with the companies of their portfolios and the cash and the position of cash and the short-term decision they have to take, so not panic at all. I think the public institution, the government, was pretty proactive and reactive in proposing some measures, partial unemployment. We had a new tool that was called French Tech Bridge, which enabled funds to facilitate internal rounds when there was cash issues, for example. Guaranteed loans, that was a massive success in France. And once again, size matters because in what we call the dry powder, which means for the available money in the funds of our portfolio, which is less than the overall funds in France, is 10 billion euros. It has never been that big, which means the funds can take good decisions and try to select the companies that will give the best performance and trying to have the strategy post-COVID to see the best ways to have this target.
Don't panic, we're just in the middle of a pandemic. So how about we follow the money for a quick second and the trends actually to raise it? I want to have everyone's perspective on this. I mean, how are European corporates too shy when it comes to nurturing scale-ups buyout? Florent?
That's the missing part, to be honest. I've got, in my team, I've got one people who is pretty much responsible, part of his job, to list all the financing rounds in France. And another one is in charge of listing all exits with corporates. The first one has much more job than the other one. So there's really
I can figure out which one.
Not that many exits. And that's really, once again, the missing part, to have the whole ecosystem work good, just like in the US. So because you have not that many exits with corporates, we see more and more private equity firms buying startups, which is good, but we would like to see more corporates, and Nicolas Dufour spends quite a lot of his time trying to convince big corporates, COMEX, to work more with startups and in the end to buy them.
There you go, that's the answer of BPI. Paul, Itziar, what's your take on this again? I mean, European corporates seems to be a little shy when it comes to nurturing those buyouts for startups and scale-ups. How can we actually help them get on board? Paul?
That's a tough one. First of all, yes, they are way too shy when it comes to, or too cautious when it comes to buy out young tech companies. At least I know at least 2 German tech company startups who said no a few times to offers from overseas and tried to sell their company to German corporates, but in the end it didn't work out. So they, in the end, still sold it to companies from overseas. I think we do I think it's again a culture problem. I think we do need some kind of blueprints and role models. We do need like very brave CEOs of large European tech companies with a startup mindset, with an understanding of why it is so important for them to survive, to buy innovation, to buy cool business models from startups, from European startups. So I think we need some more brave CEOs who could be role models in this.
Great point here. Itziar, actually, Iris Capital is the birthplace of corporate investment. So how can you actually, trigger corporates to, not be that cautious in that matter?
So the way I see it, it's all a cycle. So in Europe, the valuation metrics of those corporates are very different to the ones in the US. So the multiples for the corporates themselves are very different, and that limits also significantly the type of valuations that they can pay for startups. So the way I look at it is that we are still in a catch-up mode compared to the US. We are still some years behind, and it will simply take time. I think it's certainly not a matter of lack of ideas, and also less so the lack of capital and lack of talent, but it certainly takes time. And we are now in the process of creating those large, innovative companies that will eventually get listed and be very acquisitive in the market. And I think we are already seeing some early signs and some examples. For example, this summer there was TeamViewer acquiring Ubimax, which I think it's maybe not the scale of the US ones, but it's a good example of a company getting listed and then starting acquiring other startups.
Absolutely.
So to my view, it's a matter of time to some respect.
There you go. Let's stay with you, Itziar, for the next few seconds, because there's also another powerful tool when it comes to raising money. It's, of course, going public. But European startups do very little IPO. How come?
Question for me?
Absolutely.
So, actually, I think the number of IPOs, of tech IPOs in Europe is not so low, but many are small and not so visible and underrepresented. But as I said before, for me, it's a bit of the same dilemma. It will take time until the companies get bigger and get more visible in the listed market here in Europe.
Paul, what pops in your mind? Because, I mean, IPO are also a super interesting way to leverage the level of engagement when it comes to one particular company or startup or scale-up.
Yeah. I think I would second that what Itziar said. It's a matter of time. If we look at the funnel, so to speak, for European tech IPOs, the funnel is increasing and increasing. There, I would say, a quite high number of European tech companies who are in the position to IPO in the next 2 or 3 years. And maybe it's, I think, in Europe, at least in the private sector, we and especially in Germany, we don't have any like a stock culture, and maybe this overlaps into the professional and business space also. But I think this is really a matter of time. There are a few startups in Europe who do the IPO, I think, in the next 2 or 3 years, and the number of IPOs in Europe will increase.
Let's race against time with Florent now on set. Do you have the very same perspective?
Within IPOs, we've got a good view as well, because with our 450 funds, we are really in a position to say when it goes to the Nasdaq, it works pretty well. On average, there's exceptions. But when it goes on Euronext, it's far more difficult. Sometimes, and most of the times, companies go on Euronext for bad reasons. Sometimes because they're not able to raise money or to exit on some other ways. They're not ready, it's too early, and which means that most of the times, and we've done these studies over the last 10 years in our portfolio, when it goes to Euronext, the final exit price for the funds are 80% less than the introduction price of the IPOs, which means when it goes to IPOs on Euronext, that's really not the final exit for the funds. And it's not always a good news when we hear that from some of the GPs. So it's really a problem of maturity of the two IPO ecosystems. And we're trying to work with that. It's not easy. We're trying to, what we try to do in this perspective is try to have some funds emerge dedicated to this kind of companies. So funds that would be able to work in listed companies and in private societies as well. It's not easy because most of the time LPs prefer to have either private, either public or listed. And they don't really like the combination of both, but it's starting, and we see a couple of funds trying to work on this strategy.
To put it in a nutshell, how can we turn European scale-ups into global successes? You have 1 minute per panelist, and maybe let's start with you, Florent. What would be your key takeaway to actually, again, grow scale-ups into global successes?
Well, I'll repeat what I said and what I
Sure.
tell to GPs most of the times. Exits, liquidity for funds, that's the one missing to have the whole ecosystem work properly. I think it's on the good way, and with good examples of big runs of 100 million euros and above in the last couple of months. And what really works in when there's US funds working hand in hand with European or French funds. We've seen many CEOs accepting, the big US funds able to sign this kind of checks, and a couple of months after they come back and see, maybe we should have taken a European or French fund as well. The board would have been more balanced. And it's starting to work this way. So
Europe, those have values, right? Itziar and Paul, what are your key takeaways? Let's start with you, Itziar.
So from my side, access to capital is definitely getting better, in particular to international capital, but it would be helpful to have also more capital in Europe for late stage. Talent, I think it's also available and getting better at the moment. What I see sometimes missing is more maybe the belief, or to put it in different words, the role models. I find it very hard sometimes for our companies to think big enough if they haven't seen it happen in their ecosystem. And so I think that's up to us really to pick up this challenge. And we all know how important this psychological side plays in business. And I think right now all the indicators are pointing out in the same directions, and we have good reasons to believe in that.
Let's put scale-ups in motion. Thank you so much, Itziar. And your final takeaways, Paul?
I would say we need three things in Europe. First of all, we need a good framework. That means we need to harmonize more and more markets. We see it with the financial markets. That's one of the reasons that we have so much large fintechs in Europe, because the European market, the financial European market, is very harmonized. So we need more and more harmonized domestic market here in Europe to have a great domestic market for our startups to grow. Second thing, of course, capital, especially growth capital. We need more institutional investors to invest into venture capital and our startup ecosystem. And maybe the third thing is that we should be aware of our role here in Europe, between Asia and between the US. I think we need a commitment to our USPs. What are our USPs? We are founded on values. Privacy plays an important role in Europe since years. It plays a more important role all over the world, more and more. For example, France Digital, they put it the right way. They did a recruiting campaign in Silicon Valley to work for French startups, and the headline was tech and values. And I think that put it in a nutshell, tech and values here in Europe.
Tech and values. There you go. Thank you so much, Itziar, Paul, and Florent here on set with me. It's now time for a break. We'll be definitely back in 15 minutes from now here at the Aris Day 2020. Stay with us.